I thought the sell-off would be much worse than it is. Dow down 120, Nasdaq down 90 with just a few minutes to go to the opening bell. Keith Fitz with us this morning. Keith, look, I'm looking for safe havens, and I see defense stocks going straight up. You with me on this?
Absolutely. I own Lockheed Martin and Raytheon, among others, and I think that's a great place to be for a couple reasons. They're going to continue to grow. They're going to continue to pay dividends. And obviously, unfortunately, geopolitics being what it is, it's a growth business.
Raytheon, I always think of, that's RTX, I believe. Is that,
yes.
They're the principal missile makers, aren't they?
Well, among others, yes. I mean, the thing about defense stocks that people don't get, Stuart, is they think of them as sort of, they make missiles, they make airplanes, they make this, that, and the other thing. In fact, they're all interconnected because these things are all derivative AI. They're all complicated systems. So really, they're one and the same, but you've got to be big, you got to be strong, and you got to have a consistent backlog and supply and science. Both of those companies do. Here's
another one, another safe haven. I would say that would be oil stocks, so long as oil keeps going up.
Yeah, and again, I personally own Chevron. I've been after that one a long time. I hate being proven wrong that we're going to come to $100 oil, especially given the violence in Israel and Gaza over the weekend. That's just horrific any way you cut it. But the thing is, bad policy has contributed to that. So there again, it's a longer term horizon, relatively safe haven. I think earnings can in fact save the stock market if they have to.
Okay, now we're coming into earnings season. I'm not sure exactly when it starts, but is it this week, late this week, and into next week, I think?
Well, there's always earnings. I mean, we're going to come into the financials first. I don't know off the top of my head when JP Morgan reports, but we're coming right up on that. That's exciting because we're going to see real companies put up real numbers. The wannabes are going to get punished. And so I think investors right now, Stuart, need to make a very careful choice. What do you want to have for the long term, and what do you want to shed? Because the risks are not the same.
Back in the day, and many, many years ago, you bought gold whenever the world was on fire or whenever you had really serious inflation. You bought gold. But gold is only at $18.58 this morning, up a mere $13 when there's a war in the Mideast. What's going on?
Well, there's a couple things. The securitization of our stock market, the use of collateral, gold is not what you think it is. If, for example, Hurricane Katrina wiped out an area the size of Great Britain, they weren't trading gold for cheeseburgers. They were trading diapers, medicine, and bullets. So if you look at where our world's going, what it needs liquidity and finance. And I submit that's going to be companies that are must-have like Apple or Microsoft or the technology we use for cybersecurity. That's the new gold. People don't think of it that way, but I submit from an investing perspective it is.
Yeah, looking at the price, I think you're probably right. Keith, thanks for joining us.
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below, and of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.